Hi everyone, and welcome to this week's Berkshire portfolio update. The week has been rather quiet for major economic indicators, with US inflation figures released on Thursday showing a slightly more than expected month-on-month uptick than expected, alongside fewer jobless claims than forecast. On Friday, UK GDP month-on-month figures came in slightly stronger than expected as the UK continues to show more resilience than expected. All of these data releases suggest that central bank interest rates are expected to be at the current level longer than previously thought. However, it should be pointed out that they are still widely expected to drop in the UK, US and Europe during 2024. Looking at how this has affected the portfolios over the week, we see that 8 out of 10 portfolios have outperformed their respective AEFI benchmarks in what has been a negative week for markets off the back of those positive economic readings mentioned. As yields are forecast to be higher for longer, this resulted in a bond sell-off to compensate for this, which in turn results in interest-sensitive companies to also sell off. We sold off some of our government bond holdings at the end of December, after we believed that the market became over-exuberant in its expectations for interest rate cuts in 2024. This has been a component behind our outperformance in the large majority of portfolios. At a fund level, we see that Japan has been the best performing region, where Western economy interest rates have less importance. At the lesser performing end of the scale, we see that China has continued to underperform. However, we see that China is now extremely attractive from a valuation standpoint, and it is probable that this performance will not continue throughout 2024. A quick recap to see how the week has impacted the performance figures since the start of the year. 8 out of 10 portfolios are outperforming benchmark, with the best performing being R5 and the worst performing being P1, as bonds have sold off more than equities over the last 2 weeks. Similar to the 1 week, we see that Japan has been the best performer year to date, with our active high-yield position in the P portfolios, following this as yields have compressed relative to government bonds. Similarly, China has been the worst performing position in the year to date. However, Alliance Continental European is now following it in third, as this is a rather interest rate sensitive fund and has sold off in line with the government bonds, as previously mentioned, off the back of a stellar Q4. Looking at the week ahead, we see a US market closure on Monday for Martin Luther King Day, followed by UK salary data on Tuesday. Wednesday and Friday will be the important days of the week for the portfolios, with Chinese GDP, UK and Eurozone inflation, as well as US retail sales for the critical month of December, all reporting on Wednesday. UK inflation has been interesting over the last 6 months, as the annualized rate over that period being near 0%. Friday sees similar retail sales information for the UK being reported, alongside US existing home sales data, which has proved incredibly resilient, while US 30-year mortgages have been yielding around 8%. That brings us to an end for the week. Thank you very much for listening.